Hey, what's going on, guys? My name is D. Anthony with evolutiontraders.com. In this video, I want to give you guys a couple of tips that I was thinking about that can ultimately help you lose less money, which we're all trying to do, right? So as a trader, one of the number one goals that we're trying to do is not lose, right? Like nobody likes to lose. We don't want to part with our money. We want to be on the right side of the trade and capital preservation. So, holding on to the money that we do have to trade is ultimately one of the biggest things that is going to keep you in this business for a long time. It's also going to give you enough screen time and enough screen hours and trades to eventually get you guys to a level of consistency where you don't naturally think about the losses, or you don't overanalyze every little small thing and mistake that you make. And I've been trading for 9 years. I still make mistakes. I still, break trading rules. I still take trades that I shouldn't. And I still lose trades. Obviously, I mean, it doesn't matter how long you've been trading. You are always going to deal with that. But you get to a level in your career and in your trading journey where you can manage those emotions a little bit better. So what I'm talking about, one thing that's going to really help you not focus so much on the losing and focus so much on, man, am I doing this right, is honestly having the discipline to see how the market is playing out. Okay. So I want you guys to kind of think about it. I used this analogy earlier in the day today, but a lot of newer traders are so excited when the market is opening that we want to rush to that Christmas tree and start opening up presents before anyone is awake. And we want to take the first trade out of the gates, and we want to take the second trade. And sometimes those trades don't work. And a lot of the times the first 30 minutes, the first 45 minutes is very, very volatile. And the ranges are a lot bigger. And the price action's moving a lot faster. And when you're newer and you're just starting off, maybe you're oversizing too big. So first tip is, I believe that your first trade should be small, like very, very small. So if you're trading futures and your normal position sizing is 4 contracts, I would trade 2. If your normal position sizing is 2 contracts, I would trade 1. Now, you're going to have those trades and you're going to have those days where the first trade is going to work, and you're going to look at yourself and you're going to be like, I only played 1 contract and normally I play 3. I only made $50 on this trade. I should have made $150. And instead of letting that eat at you, instead of letting that get under your skin, look at that as a stepping stone to a better development, a better foundation. Don't necessarily look at the dollar amount. I could have made this. I could have made that. That's still a problem. And it's like almost in Evolution Traders, sometimes it's like a running joke, right? It's a running inside joke. Sometimes me and the guys will take trades and we get in and we have a specific level where we want price to go, and it hits that level and we take profits. And then we circle back around to that trade 30 minutes later, an hour later, and it's $2 or $3 higher if we're trading options, or it's 30 points higher if we're trading futures. It's not necessarily that we did anything wrong. We had a plan, we executed the plan, we made money, but it's just like a running joke, right? But like a newer trader, an inexperienced trader tends to look at themselves as they did something wrong. And ultimately, you didn't do anything wrong, and you should be very grateful and very thankful that you were able to pull money out of the markets and that you executed a trade plan to perfection, and things went right in your favor. So that tip that I want to give you guys is size down. It's going to help those emotions off the open, because a lot of times I see traders, it's 5 minutes and the market is barely open, and some people have taken 1 trade, they've gotten stopped out, and then they're immediately jumping into that second trade. And it's like, we got to pump the brakes a little bit, because that first 1, 2, 3, 4, 5 candles, the market's barely figuring itself out. The market's barely trying to put in a little bit of a range where it wants to see where price is going to go. And if you trade too early and you happen to be on the wrong side of the trade, those trades can hurt. The second thing that I would definitely recommend, and this is going to take discipline because it's going to mean that you are going to miss trades, okay? You are going to miss trades. But that's quite frankly just sitting on your hands and actually watching price. And watching price for 20 minutes, for 30 minutes, for 40 minutes before you even take a trade. Allow an opening range to be put in. Allow a pullback to be put in. Allow some type of high to be put in. Even if your process is showing you that, hey, you're giving a trade setup based on your strategy, let it go. Like, test yourself. Do you even have the discipline to watch a trade go just to see more price, just to see more market structure? Let me play something out for you here on the NQ. So today the NQ gave a little bit of a setup long. It came back with the setup short. Let's say, for example, you took this, you did not take the setup long. You did not take this setup short. This first setup long failed. This would have been a loser. So anyone who chased the first trade off the bell would have lost. The second trade, however, would have hit. And this, I know it would have hit because I took this trade for 37 points today at a 1-to-1 R. That's fine. Let's say we let these two trades go and we didn't ultimately take a trade till here when the next setup hit. Well, this setup here was a 1-to-1 R to R at 11.5 points and it did hit. So maybe you would be up here, but at least you can see where the high's at least price action slowing down a little bit. At least you can kind of see, okay, here's our day's low. So maybe you can start marking this out on your chart. So noticing as price action's going along, as time is continuing to pass, you get to this setup, right? So this setup confirms, okay? And this setup never made a new high, right? We never put in a new high. We never broke a previous swing high, never took out the high of day, and it's setting up to the short side. So being that we've been patient and we've been staying disciplined, now we're starting to lick our chops that, hey, we've got a pretty good understanding of where the market is going. The market tried to push higher off the bell, did not, pulled back, gave a little bit of a dead cat bounce, failed to take out a significant level to the long side. So when this trade starts to set up, your mind is a lot more clear and you can see this trade play out and you can actually go bigger size on this trade because you haven't taken any losses. You haven't really taken too many trades. You're still pretty fresh mentally to where you're not stressed and you're not forcing trades. And this trade setup here gave a range of 36.5 points. So using my strategy that I'm teaching here on YouTube, as well as furthering that education in Evolution Traders, is a 1-to-1, right? So if we're going to put a 36.5 point stop loss, maybe let's play 2 contracts. At 1 contract, we're going to lose around $60 or $70. At 2, we're going to lose $150. And if we hit that trade, meaning it does go to take profit, we're going to make around $150. And if you want to risk a little bit more, say you want to risk $225, you would have made $225, one single trade. And this trade hits in a matter of from 771 all the way down here in 5 minutes to 733. It would have been about 5 to 8 minutes before you would have hit that trade. So think about it. You didn't chase nothing off the bell. You didn't chase the first move down. You kind of started to get your feet wet here with some small size. And then you really start to see what the market's doing. We've got a high. We've got a low range here. We failed to break a previous swing high. We failed to break the high of day. Now that we're getting this short setup, this looks pretty sweet. Let me go ahead and add a little bit of size to this. I'm still pretty clear-headed. I'm still pretty calm. I'm seeing the market clearly. You could have put on 2 or 3 contracts here and taken anywhere between $150 and $250 on the trade in a matter of 5 to 8 minutes. I would say personally, that's a hell of a day. That's one of those trades where you can take that one trade, turn off your computer screens. So even though you were kind of watching the markets here for a few hours, a couple of hours, because this trade took place about 3.5 hours after the market opened, you're not so scatterbrained, right? So my biggest tips: on your first trade that you take of the day, whatever normal size you play, meaning however the normal amount of contracts that you normally start off with, cut it in half. That way, if that first trade is a loser, it doesn't feel as bad, and it doesn't force us to make trades that we shouldn't. And when you start to see the market structure, and you start to see some highs and lows, and you start to see, get the overall feel of the market, and you get that next setup, you can go a little bit heavier size. I would also recommend to see and test yourself. Can you stay disciplined and let the first trade go, right? Whether you want to let one trade go, whether you want to let 2 trades go, but can you even stay disciplined for 20, 30, 40 minutes? Not take any trades, allowing yourself to see what the market is doing. This is going to further your progression as a trader. It's going to further your progression emotionally, and it's going to further your P&L in the best possible way. I hope you guys enjoyed this video. Like, comment, subscribe. I'll catch you guys all on the next one.